In today's video, I'm going to share with you good news and bad news from some of our favorite holdings in Cornerstone and TSLY. The good news is our income went up to over $100,000 per year in dividends because we had a dividend raise with TSLY, and our income also went up with Cornerstone, and I'll show you how in 1 second. Briefly, let me show you my performance and value. We're up 39% for the year. The Dow's up 2, the S&P's up 14, and the Nasdaq's up 30%. So we're beating all the indexes on a year-to-date basis, and this is coming from the fact that we use a little bit of margin. For every $1 you put in your account, you get $4 of purchasing power. And it's also coming from Cornerstone, Cornerstone and TSLY, which Cornerstone, you have to play this fund right. It takes the $8 market price that you see here, $8, and it drips it. So we just got our drip shares in 7/6/23. That's this month. So we got it down at 663. 663 is where we got the latest drip shares for Cornerstone. It's a 21% dividend, and it beats the S&P over 10 years, as you saw in yesterday's video, but also it takes your 21% dividend and drips it back at the NAV. And so that's why I have 400,000 in this fund, Cornerstone, because it is the indexes. It is the index. Both of them, CLM is the S&P and CRF is the Nasdaq. These are both the indexes. So when you use margin, a little bit of margin, just a fraction like I use, you tie it to the indexes, and then the dividends from these high yielding investments pay back your margin at the end of, in my case, at the end of, in less than 3 years, my margin will be paid back, and then my account will be worth about 700,000, whereas my debt will be at 0. So, and then I'll be left with all of these dividend paying assets to myself, paying monthly cash flow for life. Okay, so, but you have to learn how to play Cornerstone, and you have to learn how to use margin properly. So if you need help using those, email me for my e-guides at akintodd48@gmail.com. So that's how you play Cornerstone. You ask for the special drip and you sell before the rights offerings. Okay, you have to do that, and that's how you outperform the S&P. And that's good news. It's grown our income to over 100,000 per year, as you saw in that last statistic that I showed you. So good news is also TSLY has increased its dividend. If we go to the YieldMax website, we'll see that TSLY is now paying over $1. Okay, over $1 for a 70% yield. Okay, 70%. So there's the distribution rates down there, over $1. Okay, where is it? Right there. You see that? 0.8 last month and over $1 this month. So that's really good news. So TSLY also contributed to our monthly income significantly on that dividend raise. So that's why our income is so high now, not only from the TSLY raise, because Tesla did great last month, so the premiums were high, so they were able to generate a higher dividend this month, but also again from Cornerstone, because we got the drip shares in. Everyone who's subscribed to my channel and bought Cornerstone, they're sending me texts and Discord alerts in our chat room saying that the dividends were here. I didn't get them yesterday. I usually get mine on the 7th, like you just saw, or sometime around the middle. You saw 7/6/23, so I just got mine. Other people got their drip sooner. It's different in every brokerage account, but people are starting to see the benefits of Cornerstone. I remember posting this on Reddit or just going through the world, telling people about Cornerstone. They thought I was nuts, but it's a 5-star fund for a reason, and other people are starting to see the benefits now, and I'm glad you're enjoying those benefits from Cornerstone, the drips from Cornerstone. You just have to be aware of the rights offering, which my Discord server alerts you on. It'll tell you when the rights offering occurs for Cornerstone. Also, others in that chat room can help you. They can answer any questions you may have on the process for the rights offering in Cornerstone. So TSLY, great news. It raised its dividend, but here's the bad news for these two funds. Are you ready for the bad news? Well, we're overextended. Okay, so what do you guys think? Do you think that yesterday's pullback was just healthy and we're going to resume our uptrend today? Or do you think that that the market has had a little bit too big of a run, including with Cornerstone, and we should be taking profits? Well, at my channel, I don't take profits. I never take profits in my channel because then you lose income. I might rebalance around certain names, but I'll never sell shares because then I lose the income. The income is valuable because you don't want to just lose monthly income to pay your bills and live financially free. You want to qualify to banks for loans. And when you break up that that monthly income, it's like losing a job. It's like losing your paycheck history, and that's not good for loans. So if we're here at Tesla's stock price, okay, it's had a monster run recently, as we know, from 150 to 250, and it's trying to make its way up to 300, which would be another 100% gain. It was already up from 100 to 200. So if it gets from 150 to 300 here, that's another, we're up over 100%, okay? But Tesla still has room to run higher on its max chart. It was at 400, and it didn't dilute shares since its recent, when it was at its recent high. It's not like it did a share offering, I don't believe, to dilute, so it should have no problem reaching its old highs. The only resistance that will come is the fact that there are people here who sold, people who bought here at this price that I'm showing you at in August and September. They're going to want their money back when it hits 300, okay? But if we can surpass that resistance, then we can see 400 again, because those are the old highs for Tesla. And that's just the short-term old high. This is still a company in its infancy, so you could see new highs year after year once resistance is beat. So you have to surpass resistance before there are clear skies ahead. So 300 is that resistance area, and then 400 would be the next resistance. So does it look all bad for Tesla? No. I'd say it's had a huge run, but it still has room to run higher. But don't be surprised if you see some sideways chop for a little bit. Now, here's the market, okay? SPY, which is what Cornerstone follows. Is the market too overextended? I mean, yes, it's had a big run, and we were coming off overbought levels. 80 was overbought. We pulled back to 60. I told you that's when I started nibbling again on shares. We got overbought again, and now we're back to 60 again, as you can see. So this is actually looking pretty constructive. We had a pullback to that brown line, which is the 20-day moving average. That's a nice short-term support area. But I'm looking for the purple as my entry point, the 50-day moving average. If you need help understanding technicals, my e-guides also cover that. Email me for my e-guides at akintodd48@gmail.com. I have fundamental analysis, technical analysis, volume 1 and 2. Then I have volume 3, which is how to live financially free out of your brokerage account using margin. And then volume 4 is how to properly play Cornerstone. So SPY, it's had a big run. Look at where it was on its max chart. It still has room to run higher. This is a nice basing pattern it put in at 400. So we could see old highs of about 500. 480 was the old high there on S&P, I think. The MACD is crossing, as I've been sharing with you on a max chart. And the RSI still has room to run before it's overbought at the gray. So we can have a push, okay, end of the year end even. People are fearing rate hikes. Don't fear rate hikes anymore, because the bulk of the rate hikes were done, in my opinion. And the market's always forward-looking 12 months. So we've already priced in all that. And so I wouldn't fear a rate hike. I would actually look forward to rate hikes as a healthy, as an opportunity to see healthy pullbacks in the market. And that's when you can build your positions. Build your positions on rate hike fears. And now you also don't want to just be buying anything at the highs in the market, but since we have dividend holdings, all of our funds pay dividends, even Tesla, Cornerstone. We're just watching this number. I just want my margin paid down at the end of 2 or 3 years or whatever it is. I want this number 430 to grow to 700, and that's without capital gains. The market averages 10% gains per year, so we could see another 70,000 in capital gains on top of our dividends of over 100,000 per year. So we're playing both sides here. Performance, we want dividends and days gains. So we want ultimate performance, because you don't want just dividends that go sideways. Okay, that gives you qualifying income to banks, but it doesn't get you ahead in life. You need performance. So we're getting best of both worlds with Cornerstone and with Tesla. They both move up, as you've seen on the charts, but they also pay you a nice dividend to live financially free. It doesn't matter what these stocks do. If they fall, it doesn't matter. We just hold it, in Cornerstone's case, for 5 years. That 20% dividend cash flows you in 5 years. In Tesla's case, a 70% dividend, even if they can't sustain that as the stock falls and the premiums and then the premiums fall as the stock falls, that's still less than 2 to 3 years of a payback period in Tesla. So we're playing the cash flow game over here at this channel, and the qualifying income game at this channel to get loans and level up your account and grow faster. I use SBA loans, personal loans. So these are how I use my dividends to qualify for those loans, and this is how I get financially free, is I level up my account with these loans, and then that then pads this available for withdrawal number 174. that means I have to fall 174 grand before I'm in a margin call. So that's highly unlikely. I mean, you'd have to have a 10% on a 10% drop in the market, that's 40 grand. On a 20% drop in the market, that's 80 grand. But if you factor in my margins, the 200 grand in margin I have, so we'll call it 650. I have 330 in margin or whatever it is, 325 and 430. So let's round that to because I have 430 in my account and I have 235 margin. So let's just round that to 650. 650 times 10%, 65,000. 20% would be 130,000. So I'm still in the clear. Even on a 20% correction, I won't trigger a margin call. And if we get a correction like that, I have my put options in place. So yes, guys, we don't care what the market does. It is overextended. That is bad news, but it has room to run higher. That's good news. It's kind of neutral. I'm kind of torn. I'm on the fence with the market, but we have these puts in place just in case. Just a little bit, 65 bucks to 50 bucks. Doesn't seem like it'll do much, but if you have a huge 20% correction on the market, these will actually clean up and make you more money than you lost, okay, if you play the puts right. So anyway, that'll do it for the video, guys. Great news. We got an increase in income from Cornerstone and TSLY, but the bad news is the market's overextended, okay? But we don't care either way because we're not selling. We just collect dividends and play the cash flow game. But I would say wait for pullbacks in the market. I'm waiting for a pullback to the 50 before I get aggressive in any of these other funds. So that'll do it once again. I hope you enjoyed this video. If you have any questions on my strategies, email me at my email, akintodd48@gmail.com for my e-guides. And also, if you have any other ideas on videos you want me to cover, just leave that in the comment section below. And I'll talk to you soon. Thanks.